Hi guys, my name is Jeff Gibby. I'm the Business Development Manager here at MetaStock. Thank you for watching the recorded sessions of our online trading summit. If you're interested in MetaStock, you can get a 3-for-1 offer at metastock.com/traders-summit 3-for-1. Enjoy the video.
Hey, good morning, everybody. This is Jeff Gibby. I work with MetaStock, in case you're not familiar with me. Welcome to today's class. We're going to kick it off on time today, and I want to thank you for coming. We've got a great lineup today. It's going to be a good day. So anyway, welcome to the event. Good morning if you're in Indonesia. Good evening. Welcome. Let's go ahead and kind of just get a few things out of the way. I want to talk a little bit about the legal disclaimer first of all. Let's go ahead and go back to it. Today's demonstration is designed to instruct you on using MetaStock, the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I do want to, our summits keep getting bigger, they keep getting better, we keep attracting really good speakers, and I want to take a second to just throw a shout out to Stocks and Commodities magazine. They've been supporting the events since the very beginning. They've always been a sponsor of ours. We really appreciate the work that they do. I hope when you registered for the summit you requested your free copy of Stocks and Commodities magazine. It's such a great magazine, and as part of that subscription you're going to get access to all of the articles that they've actually written since like the 80s or for a long time. Magazine that's been read by 1.2 million traders around the planet. Definitely one of the best ones in the industry. So in any case, yeah, great sponsors. Want to say hi to them. Want to thank them for kind of doing the sponsorship. One of the other things is if you do buy any of the add-ons or any of the products today, they're actually going to give you a 2-year subscription. And I'll go into a little bit more detail about that as we kind of get going today. But there you go. So our first speaker is going to be a gentleman by the name of Rob Hoffman. Oh my gosh, I better start drinking some coffee. Rob Hoffman and I worked together very closely, I will say, last summer. And he's a great speaker, but in addition, he's definitely a great trader as well. He has won more domestic and international live real money competitions than just about any trader on the planet. He just finished another win in San Francisco, which gives him 6 international wins and 14 domestic wins. So we're happy to have him here. He always does a really good job with his talks, and let's go ahead and bring you on here, Rob.
Great, I'm here and ready to take the screens if you're ready there, Jeff.
Here it comes. Is there anything else you wanted to add to that?
No, I appreciate actually. It's interesting you mentioned Stocks and Commodities magazine. It is a great magazine. Actually, I was just featured in a 4-page article in August here, so just last month, a 4-page write-up on me and my methodologies, my ideas, thoughts, perceptions, risk management, a lot of different discussions there. So really great stuff. So what we'll just do is now we're about almost 5 minutes now into my time here, gang. So what I'm going to do is I'm going to really step this up, if that's okay with you. Jeffrey, thank you very much. It's great to be here with him, with MetaStock, and with a lot of great people. I know my friend, he called me Hubert. I might as well be Hubert. Hubert and I are very good friends. We just recently went to a long-range precision rifle sniper school together, and that was a lot of fun. And so we might as well be, just call me him, me. That's okay. Wonderful. Well, good morning, good evening, good afternoon around to the world, all of you here. Again, trading involves risk. At this point, I need you guys to read this risk disclaimer. If you don't understand it, call my office. We'll try to explain it to you here, but consult a registered financial representative before we're doing any trading. Also, options carries risks with it as well, and by all means, there's a great website out there you can look at to understand a little bit about risk. My understanding is we have over 6,600 people registered for today's event. So what we're going to do, especially now in light of the fact that we went ahead and had, well, thank you, Melkor. Melkor says, no worries, this makes it more authentic. Yeah, it's unusual. I've been doing this for so many years, and what a bizarre situation. But we do have 6,600 people registered for today's event, according to Jeff. And so what we're going to do, look at the large group here. We're going to go ahead and just try to plow through this information, and I'll answer questions on the back end for you. With that being said, despite all the crazy things that happen, I feel like I'm in a trading competition because it seems like something bizarre always happens during a trading competition. But I did just recently win the one in San Francisco, as well as some of the other ones earlier this year. So I'm going to show you some of the same techniques I focus on in those trading competitions. Who's this going to be focusing on today? Stocks, options, futures traders, and Forex traders for day and swing trade. So my focus today won't really be on long-term investing. It's going to be mostly on day and swing, active day and swing traders for stocks, options, futures, and Forex. And here's my website, becomeabettertrader.com/20x. This will go ahead and be a great resource for you to sign up on. We're going to be doing a live trading event here in the next week or two before my little baby is born, and so it'll be great for you guys to go ahead and be part of that live trading event to see some of the things we're going to talk about today in action. So make sure you've gone there. If you already sign up for it on the introduction slide when you sign up with Jeff. At this point, I'm not going to be able to talk much about who I am. I speak frequently for the financial exchanges. I've been featured in international magazines here in foreign languages. I've written about the strategy I'm about to show you here in brief in 5 different languages around the world. In fact, I'm going to be doing an update presentation to this in a little over a week or so. So you guys, if you guys sign up on that front page, can be invited to that class as well. Also was featured in another trading magazine earlier this year, back in January of this year. And then, as we talked about, Stocks and Commodities magazine here, which is really great. I was just featured in a 4-page article through them, and I know several people are saying, how do I get that article? I'm not sure. Maybe you sign up for that trial. Maybe they offer access to that through the trial if you do the trial or so, or if you get a subscription. I'm not sure. Otherwise, you might be able to get the article separate there. So, but great article if you guys to learn from as well. But the real reason you guys are here at this point, and what I want to get to is, these are the trading competitions, the real live money competitions I've won around the world over the last several years here. I've done around 23 of them or so, approximately 23 or so, and I've won about 20 of them. So pretty great stuff here. And so we're going to talk about some of those strategies. This is what some of those big international ones look like. You have people lined up from all over the world representing themselves or their countries. So I'm proud to represent the United States in these big international ones. But gang, in the end, I'm just like you. I went ahead and I learned, you see, those were my first books I ever checked out, How to Read the Wall Street Journal. I had 2 full-time jobs and a part-time job. So when people say, well, I want to learn how to trade, but I'm busy, I can relate. Get it. So bottom line is what I'm about to show you now is, the things that had I known then, what I know now, had I known it then, my life would have been infinitely better and infinitely better, faster, and with way less heartache. And I've never forgotten the promise I made that if I ever did something well with this business, I would go ahead and give back. In fact, even in the 90s, I was doing events for special interest groups, American Association of Individual Investors. So I was giving back long before I ever had a business around trading as well for many years. So great stuff. Let's get into the strategy I want to share with you today. I haven't been featuring this strategy much the last several months, and a lot of people have been saying, Rob, I want to hear more about the IRB. Rob, I want to hear more about the IRB. So today I'm going to do kind of a initial class on this, and I'll do a kind of an update class to this in a little over a week, especially now, though, today with a little less than 40 minutes left on the clock because of the technical glitches in the introduction, I won't be able to get to the update stuff. But if you sign up on the front page of the website, I'll get you, the ability to come to that update class as well. So what is this trade? This trade is a price action based continuation trade. When do I use it? It's most effective in trending markets. That's when I like to use this. In fact, most of the people that step away from this, they tend to do really well with this at first because they focus on it more in trending markets. So like I'll take a 20-period exponential moving average, and I'm looking for about a 45-degree angle approximately. Well, over time, what they do is they start doing it with 40-degree angles and 35-degree angles and 25-degree angles and 20-degree angles. Next thing I know, they're like, "Hey, Rob, that strategy you taught me isn't really working much anymore. Did something change with it?" And I'm like, "I don't know what you're talking about. I'm still using it. I just want a competition, with it." And come to find out, what they've done is they've shallowed out their trend so much that they don't even really have much of a trend anymore. That's the biggest number one thing I see people doing wrong. Is they're like, well, yeah, but I got so many good trades still when I did it here, and yeah, I got a lot more trades when I did it here, because of course, as you can imagine, the more lenient you make the rules, well, the more trades you'll get, but then your probabilities will go down. So keep that in mind. Most effective in trending markets. How do we identify these signal bars? Looking back over the last 20 bars, and you'll see it says 20 periods. Doesn't matter whether it's a 2-minute bar, a 5-minute bar, 15-minute bar, hourly, daily, because for the swing trading, I'm looking at this on a daily and a weekly basis. Okay, so looking back over the last 20 periods for signal bars, where the open and the close are approximately 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. Basically, what we're doing, we're looking at the bar and asking ourselves, how much wick is showing? Is it approximately 45% or more? And so what that looks like here is these right here. What I want to see, I want to go ahead and see when I look at the high of the bar to the low of the bar in a downtrend, I want to be 45% or more wick on the bottom side of the candle. So here's the low of the candle, here's the high of the candle. I want to be 45% or more off the low. So it could be a green bar, red bar, doesn't matter what it is, but what I want to be is I want to be 45% or more off that low. All right. Now, in an up trend, I want just the opposite. I want to be 45% or more off the high. So here's the low, here's the high. I want 45% from the open and the close. I want that in the bottom 55% of the bar. So I want the top part to be 45% or more wick. And by the way, these are 4 individual unique examples. I'm just trying to show you it doesn't matter whether it's a thin green bar, or sorry, a thin red bar, a wider green bar, doesn't matter what it is. That part's not relevant. What's relevant is the high to low in relation to the 45%. Okay, so where's my entry? It's typically 1 tick, 1 cent above or below the signal bar. So in a downtrend, what I'm looking for is to go short after it comes down, pops back up, goes back down below the low here. I'm looking to go short 1 tick below the low. Okay, so it opens up here, it goes down, pops back up. When it rolls back down through here, I'm looking to go short 1 tick below the low, 1 tick below the low, 1 tick below the low, or 1 cent, 1 pip. If it's an options trade, looking to take the initial entry 1 tick below the underlying instrument there. Okay. In an uptrend, I'm looking for just the opposite. I'm looking to go ahead and go long 1 tick above the high of these bars. Okay, so it's very important. That's what we're looking for. These are the signal bars, and the entries are above and below. I'm going to show you lots of great examples of this in just a few minutes. Where's the exit? It's typically a trailing stop or to the key next support resistance level. I'm going to show you how to do that in just a few minutes. Where's the stop loss? Typically 1 tick, 1 cent below the low or the high of the signal bar on the opposite side. So if we get in short over here, okay, so we get short down over here. The stop loss is actually going to be 1 tick above the high of this bar. It should not come back through the high of that bar. Okay, so if we short down here, it should not come through the high of the bar. Now, I'll tell you a little secret here. It shouldn't even get past 60% of this bar. It may pop up a little bit after the initial entry, but then we expect it to roll right back over. It shouldn't go past 60%. If it goes past 60%, it's probably going to go all the way back to 100%. Just a little secret there. Okay. Now, a couple key points to remember. Think about the concept of rocket fuel. If it's moved a large range quickly, the breakout is likely to fail. And by the way, as a reminder, again, this is going to be recorded, so you can go back and play this. Plus, I'm going to be doing an update to this here in a little over a week. So all of you that sign up on the front page of my website there are more than invited to that. So as we go ahead, we look then about rocket fuel. Here's what we're looking at for rocket fuel. With rocket fuel, we see big long bars that are 2 or 3 times the average true range of the normal bars that are trading. So we get a bar like this, bar like this, bar like this. So those are the kind of the normal bars. Let's say you get a big wide range bar like this, and it makes this kind of tail on it. I get real nervous about that. Why? Well, where's my entry? So the market opened up here. It went all the way down here, came all the way back up here. Well, remember, my entry is going to be way down here. Well, that means it's got to come all the way back down here just to go ahead and become a short. All right, so I don't like to see that. That dramatically increases the likelihood of popping back up, greater, sitting there longer, taking heat. So think about the concept of rocket fuel there. If it's moved a large range quickly, it's likely to fail. This has very diverse applications. Whether we're looking at this from the, by the way, can you guys still see the slide that has the list of all the rules on it? Yeah, that's what you guys should be seeing here. Diverse applications, excellent. Okay, just making sure we're on track with each other there. Diverse applications for different instruments and different time frames. Gang, I can't emphasize this enough. Whether you're a spot forex trader, whether you're an options trader, whether you're a day trader, intraday, or a swing trader, I use this in competition. In fact, I'm going to show you some actual competition winning examples in just a few minutes. I use the MetaStock. So it doesn't matter what you're at. It has a lot of diverse applications there, which is great. You want to trail your entries to reduce risk of RTM, reversion to the mean, and you want to trade in the direction of the BBT Pro Trader Pack, which actually we have that available for MetaStock. Jeff is going to teach you or show you a little bit about that in a little bit, or as a very basic alternative, a 45-degree angle, 20-period exponential moving average over the last 20 bars. So whether you're looking at 20 days, 20 weeks, 22-minute bars, 25-minute bars, I want to see approximately a 45-degree angle there. Again, the more shallow you make it, the more trades you'll get, but the less success and the lower the probability with the trade. Trade's much higher probability if you're sticking to this rule right here. And again, the biggest thing I see is people go back and they kind of start cheating on that rule, and they get more trades initially, and they still see some really great results, but then over time they just don't even recognize themselves anymore. So be careful with that. So again, what I'm looking for in a downtrend is I'm looking for the market to be going down. It comes down, pulls back off the low. What's happening here is one or more institutional traders has not only stopped the market from going down, but they've driven the market back up. But remember, we're in a downtrend here, gang. So what I'm looking for is once that one or more institutions' inventory is dried up, I'm looking for the market to resume the trend. And usually when it resumes the trend, it will do so with a great deal of vigor. In an uptrend, I'm looking where the market's been going up, and then what happens is one or more institutions starts coming in selling heavy, could just be covering, selling off their longs or taking fresh short positions. We don't know, we don't care. What I do know is that what I care about here is this rising uptrend, and what I'm looking for is to break up. Once we push up, we pull back. I want to get back above the high. I want to see where that one or more institutions' inventory that stopped the market from going up is no longer there, and now the market's free to go on board the original direction. Okay, so what that looks like here, these are MetaStock charts. When the market's coming down, and you'll notice this bar, it's 45% or more off the low. All right, so initially it goes back up. All right, so what happens is as soon as it starts going back up, people who went long up above, they have false hope that it's going to come back up their way. They're like, yeah, come back up. I'm losing money. Come back up. People who are thinking about shorting are like, oh, good thing I didn't take a short. That would have been another one of those losers, okay? And then the people who shorted too late, because it's already been coming down, the people who shorted too late, well, guess what? They short here, and then it goes up, and they get stopped out of their trade, only to watch it go right back their way. Many of you have that happen very regularly. So what's happening is there's 3 common buy-side and 3 common sell-side trader mistakes. And I just reviewed the 3 common sell-side trader mistakes with you just a moment ago there. So we'll put those up on a slide in a little bit. So what happens is we want to go and identify this bar. This is now the signal bar, okay? But that's not the bar we short on. The bar we short on is when we break down through that low. Well, notice what happens. So one or more institutions stop this market from going ahead and going down, and then it went ahead and actually started pushing up. Well, then it starts coming back down. Notice for 2 weeks it sat there, basically right there at that level. So one or more institutions that had that inventory still had that inventory in that area. But what happened once it broke down below this, it whooshed down and it dropped about $30 that very next week. So went ahead and had a really nice drop right down here. Okay, same thing over here. Now the market was coming down in a downtrend. I actually, in my free nightly videos, had pointed this out to people back when this was happening. That's why I still show this as an example. So we had this bar. You could see it's 45% or more off the low, isn't it, gang? Can you guys all see that? It's 45% or more off the low. So now what we're looking for is we're looking for it to break down below there. And then once it does, we're expecting the market to really accelerate to the downside. Now, a couple key points about this. That's right, whoosh being my technical term. Exactly, Bill. Perfect. So what I'm expecting is a whoosh. The reason why I call it the whoosh is because I want you guys to kind of have that expectancy in your head. What should happen once that one or more institutions volume is burned up, the market's free to go back on board the original direction it was going. And so usually what it does, it catches up with itself then as everybody starts to realize they're deeper on the wrong side of the trade. They missed the entry. They should have taken the entry. Everybody starts realizing all these different things once we break down below those inventory retracement bars, and that can get the market really going. Now, here's one question for you. Can you go ahead and take these secondary signal bars? If you notice, gang, there's multiple re-entry opportunities, or is there? Can you or can you not take these? What do you think? So, in other words, here's the original one. Okay, you take this one. Let's say you get stopped out with your profit, because like right here, this popped back up. So if you're trailing down, you might have gotten popped out on this trade. Can you take the entry down here, or can you take a re-entry down here? The answer is absolutely, as long as you still have the trend. As long as you still have the trend. Okay, that's the key here. If you don't still have the trend, if the trend is flattened out, then no, we would not want to. So if we were down here and the 20-period exponential moving average has gone sideways, the answer is no. Okay, let's talk about what's happening here. Again, these sell side, buy side mistakes. I just reviewed all the sell side mistakes with you on the chart, how it's distracted the sellers from wanting to sell when it pops back up after an inventory retracement bar. It gives buyers false hope who went long up above. They see that inventory retracement bar, the market starts going up, and they're like, yeah, come back my way, come back my way. And then, of course, the traders who waited for it to go down, go down, go down, now they finally feel the confidence and get that courage to go ahead and take the trade. They take the trade, well, then it pops back up against them. They get stopped out, only to watch it go right back down their way, break through that inventory retracement bar level, and go down. So those are the sell side mistakes, and I'm trying to get you guys here today to be more like the hunters versus the hunted. But these are the buy side, the sell side mistakes. Great question. So Rodney says, yes, it's a robust method. Adrian says, Rob, do you look at volume with this technique? Okay, great question. I don't have a lot of time to talk about that today because, like I said, we lost about 15 minutes on the front end due to the various issues this morning. But what I'll say is this. Actually, if you think about it for a minute, Adrian, it really won't matter. I can make a great argument either way. So what happens is, if this is really heavy volume, okay, so if this is really heavy volume, well, that's even more meaningful to me if it breaks down below this. So if there was a lot of volume here, if this was a lot of volume, and then it turns around and takes back off to the upside, and then comes back down and eats away so much volume here that it whooshes through, that's important. At the same time, if there's very little volume, then that means there's really just likely one or two institutions, and that's even more meaningful to me. So either way, volume to me is not important with this particular strategy. trend and the 45% with the bars is. Gang, and I'll answer this one last question, then I'm going to keep going. It doesn't matter. Like right here, we use this strategy on 2-minute, 5-minute, 15-minute, hourly, daily, and weekly bars. Okay, so here's the trailing stop methodology. What happens is when we go to take a trade, before we get into the trade, we need to know our stops, our entries, our losses, our general perceived targeted into space. All right, so my case, a lot of times I use like daily, weekly, monthly pivots as an example, the classic formula, not all the stuff that everybody else is going and putting out there these days. So what happens is, whether it's either a classic pivot formula or it's like a long-term key support resistance level, we identify the target into space that we're looking at. Now, what happens is an entry is taken. Then what happens is as we get about 50% of the way to the target, which in this case here is where the target was, as we get about 50% of the way to the target, we're locking in 50% of profit earned. As we go in and get 80% of the way to the target, we're locking in 80% of profit earned. You guys follow me so far? 50% of profit earned when you're 50% of the way to the target, 80% of the profit earned when you're 80% of the way to the target. Everybody with me so far? Okay, great. And then as we go ahead and we get up to price, then we trail it up to 90%. Why? What's more likely to statistically happen here? What's more likely to statistically happen? When we get up to the price, the market's been going up, up, up the ladder, and it hits a big resistance level. What's more likely to statistically happen? Just keep on going, or is it more likely to stop and reverse, at least temporarily? Far more likely to stop and reverse. Absolutely. So what I'm going to do here is I'll give it a chance to break through. I'll give it a chance to run, but not very much. Okay, it's got to have a short leash when it's up to the target. Okay, in this case, you'll see what happens. It didn't go ahead and break through the target, so just moved it right up to price and get taken out of the trade. So 50, 80, 90% to price. 50, 80, 90% to price. Okay, all right. So let's go ahead. By the way, just as a reminder, you go to my website, becomeabettertrader.com. Becomeabettertrader.com. Go ahead and if you have, get signed up on the front page of the website. There'll be an update video to this that'll be coming out in a little over a week, and also you guys will be given an opportunity to come to my live trading room for a day to see some of these things in action as well. Okay. Now let's look at some more examples. This is weekly and daily charts. So over here on the left, what we're looking for, you have an uptrend in place, and you have the 45% off the high. You're looking to go long one tick above the high of that bar. Long one tick above the high of that bar. Long one tick above the high of that bar. Okay. Stop losses are going to be back behind the opposite side of here. Okay. Stop losses are going to be on the opposite side of the signal bar. Okay, and the good news is this should be recorded for you, so you guys can go back and replay this over and over again, which will be awesome. So here's daily examples. Lots of these 45% off the highs in an uptrend. Well, so once we break above those highs, that's where the long is taken. Break above the high of that 45% bar, that's where it's taken. Break above that high, that's where it's taken. Above that high, that's where it's taken. You guys get the drift here. That we have this 45% off the high in an uptrend, and it's resistance, it's distribution until it's broken. So until it's broken, can't take that trade. Sometimes that's where people get themselves in trouble. They'll front start it, they'll see it start to come back up towards it. They'll be like, ooh, I want to get in that trade early so I can get some extra profit. Well, the problem is until it actually breaks through, it's still resistance. So like right over here, notice once it finally broke through over here, gang, that's when it started to take back off, right? That's when it started to take back off, but it had to break through it first. Okay. Here's some examples I actually used to win trading competitions around the world. And so we have the downtrend in place. We have the bar, it's 45% or more off the low. And so what ended up happening was I went short right below the low of that. And what did it do? This was a live trade I took during the trading competition over in Paris, France. What did it do afterwards? Whoosh to the downside. Exactly. Okay. That black line is the 20-period exponential moving average. Okay, so right here, 20-period exponential moving average. Here's some more trades that I took during the trading competitions there. So as we go ahead and we take a look right over here, the 45% off the low trade, broke down one tick below the low of this bar, and then what are we looking for? Whoosh to the downside. Here was one, this was great because I was able to put the trade out about 18 minutes or so in advance, which was nice because all the judges are standing over you in these international competitions asking you constantly, are you trading? Are you trade? Because you got to show and call out your trade live, real time. They got to validate it, verify it, write it down for everybody to see, and then all that stuff. So here we had a down trend in place. Here's the bar, 45% or more off the low in a downtrend. Well, look what happened. So, this is all that stuff that happens. People went long up above. It went ahead and started to go back up, gave them false hope that they might actually turn back to a profit. People who shorted after it's been going down, 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 they get stopped out on the way back up. The people who are thinking about shorting, who hadn't shorted yet, watch it go back up. They're like, whoa, good thing I didn't get into that trade. That would have been another one of those losses. And then so they turn around, they go off to the new trade, they go off to look at something else, and then it rolls right back down. What did it do, gang? What did it do when it broke down below my inventory retracement bar? That's a live trade I took during the international trading competition over in Paris, France. What did it do? It whooshed, exactly. You got it. That's right. So whoosh right to the downside. Then I went ahead and I trailed that down because it was a nice drop there. It was, and you see it dropped pretty nicely on gold at that time, and especially for being that time of the morning. And then right over here, what happened was it happened again, and I was able to get in a second time. And what did it do after that, gang? It whooshed, exactly. So great stuff. All right. Here's another trade that I took during the competition over in France. So I did a lot of inventory retracement bars during some of these competitions. And so market's going down. This was crude oil in this case. It doesn't matter. Most of these trades, gold, crude oil, again, the Forex, the currencies is either futures or spot Forex. It doesn't matter. Pick your poison from my perspective. So the market's going down in the backdrop. Here's our bar, 45% or more off the low in a downtrend. So what happens? I shorted right below the low of that bar. What did it do? That's right. It whooshed. Okay, guys, getting the point there. So what we're looking for, we're trying to get you guys to think more like institutional traders. Be the hunters, not the hunted. These are the mistakes most of you make, in your trading. Okay, you either identified a great trade, but you got distracted from buying because the market started to pull back a little bit against the uptrend, so you didn't take the long, only to watch it go up the way you knew it was going to go. You went ahead and the buyers who went ahead and or the sellers down below who shorted watched the market pull back a little bit, giving them false hope that the market's going to roll over and become a sell, only to spike right back up and stop out those late buyers who needed the big up bars, because a lot of us need to wait till those big green up bars take place before we get long. Well, then, sure enough, that's usually what the market's due for a pause, and then we get stopped out during the pause to watch it go back up. So what I'm proposing is trying to show you this strategy here that I use and teach with institutional clients as well, because they're the ones actually causing this. So it works out very well. And trying to get you to think more institutionally, more like the hunter, not the hunted. Okay, so as we look and recap on this here, what we're looking for is we're looking for a downtrend. We're looking for a bar 45% or more off the high. Again, it doesn't matter whether we're looking at daily, weekly charts. It doesn't matter whether we're looking at 2-minute, 5-minute, 15-minute, hourly charts. We're looking for these bars come 45% or more off the low in a downtrend, and 45% or more off the high in an uptrend. Okay, this is what it can kind of look like. What's nice is MetaStock software actually takes us. So here, like you see, we've got these different signal bars here. So these are the IRBs, the signal bars. And then here, the MetaStock software can actually help you identify those breakouts. Can you guys see that? So here's the signal bars. Let me just highlight those for you real quick with the MetaStock software. Here's a signal bar, and here's the signal bar. And here's the signal bar, and so MetaStock detected the breakout above those, and so immediately puts signals on those once we break above. Does that make sense? Okay. Jeff could talk to you more about this, how all that works, but the bottom line is really great stuff to go ahead and kind of help automate that process. Here's my pro pack of indicators on the MetaStock software. So that IRB, you can see, take a look at the IRB, take a look at the IRB. So really, it's phenomenal stuff to help identify some of these, but it also kind of just can show you guys here what it can look like. Forgetting the MetaStock software just for a moment, Jeff will remind you of that, but just see how it kind of works. It identifies those signal bars and then, prints off when we do actually make the break. Okay, here, and then there's another one of these. This is the reverse inventory trace bar, which we didn't get to talk to you about today. But just take a look at all the IRB, IRB type trades here. Look at all the IRB type trades. Forgetting for a minute the reverse IRBs, which are these guys right here, which we didn't have a chance to talk about here. But a lot of great opportunities for entries and re-entries when you're in a trend for this IRB strategy. Okay. So, and then the reverse IRB, you see lots of reverse IRBs as well as the classic IRBs. Here. So there's the classic IRB, you got the reverse IRBs as well, lots of reverse IRBs. Here's another classic IRB. So what's really nice is the IRB stands for inventory retracement bar. So that's what I've been teaching for the last half hour or so. So so that's what we're looking at. So gang, I've used a lot of these to help me win trading competitions around the world. And I've written an article in 5 different languages on this strategy. Pretty phenomenal stuff. It also helped me in part to get some of these big numbers during some of these trading competitions. Some of this competition, I've had some pretty big numbers registered on the board with live real money using some of these strategies that we're just talking about here. Today. So you remember this guy? I'm going to take questions in just a moment here as well. So I just want to get this part out, and then I'm going to take questions right up to the end, and then Jeff can go from there. So, but the bottom line is, gang, I remember what it was like to have 2 full-time jobs, a part-time job, and I was just trying to become a trader. I had a son at home who fortunately became a really productive member of our society, I remember like, man, please let me be successful. I'm trying so hard, blah, 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 blah. And so I never could have imagined that, here I would, 20 years later, well, I guess 30 years later now, well, no, 20 years later from that, 20 plus years ago, I would have been sitting there saying, hey, you know what, 20 years from now, you're going to be like the guy who's won more trading competitions than anybody else in the entire world. There's a lot of people in your business. They're going to be talking about trading. You're going to be the guy doing it. I would have never imagined I was that guy being written up in all these articles like I was this year that I just showed you a few minutes ago. And so I'm really excited to be here with you guys today and try to do something, show you something different. I never would have imagined I'd be sitting here in these big trading competitions representing the United States. I was the first American to ever win the trading competition over in Europe. The big one here with all these people represented around the world. Okay. Pretty awesome stuff. So gang, don't forget, go to my website, becomeabettertrader.com, get signed up there. You can come to the update class that I'll be doing to this in a little over a week. Also, I'll be doing a live trading session, so becomeabettertrader.com, you can go to that. You also don't forget the technical analysis stocks commodities magazine here. I have that 4-page article you can read about. That was in the August edition. So if you have it sitting around the house, you should be able to read it there. Probably already have. Otherwise, try to get access to it through your new membership to Technical Analysis Stocks Commodities Magazine, or call them and ask them how to get access to it there. And then the last thing that I have to offer you today before I take all your questions is what I have here. I tried to briefly go through one of our trading setups today. Obviously, I have several more that I use even on a regular basis. So what I put together was a 3-part training course that includes 1 conservative trade, 1 aggressive trade. It's not the inventory retracement bar strategy that I share with you today, and includes the entries, exit stops. It's a 3.5-hour course. So obviously in 30 minutes here, I briefly covered the inventory retracement bar. And like I said, we lost a little time on the front end due to a technical glitch in the introduction from Jeff. So we went ahead and I had about 30 minutes. I got a 3.5-hour course on another couple training sessions that I have. It includes the award-winning trading strategy and also the personal optimized settings that you can use. So in other words, you don't have to have proprietary indicators. I have a segment that shows you how to use it with proprietary indicators. So if you have like the MetaStock plugin, I show you how to use it with the MetaStock plugin, but the other sections are just the indicator that anybody here with a reasonable charting platform, like a MetaStock or a TradeStation or whatever, just any of the main platforms out there, the non-freebie platforms, you can use. Toss, you can use it with, all that stuff. So really great stuff. It's for intraday and end-of-day entries. It's for full-time traders to get a lot more opportunities, and for part-time swing and options traders to set this up while they have a second career still. It gives you instant access to the 3.5-hour course. You can start watching it here today. It gives you the indicator settings, the ideas and the strategies I don't share with the public, so you'll be ready for the last 4 months of 2016. Let's be honest, these last 4 months, the rest of this year was great. My equity curve has been phenomenal this year. But the reality is the last 4 months of the year with the election cycle here are going to be the best months of the year. So it's going to be really awesome. So I give you the settings that I use to have the advantage over everybody else for this particular setup that you're going to need, and pretty awesome. So what I did was all it is right here. It's basically $97. And if you go on the website, it's a $497 class. I offer it to you for $97 for basically free to go ahead and get I want you to take a chance on me. You have a lot of speakers to learn from today. There's nobody else in the entire world that's a 20-time domestic and international real money trading competition. There's nobody on the planet. Nobody on the planet that's that. I put a lot of time and a lot of effort into real money trading. I know what it takes to be successful. I know what it takes to be a failure. And so the bet that I'm making here, the trade that I'm making, is that if you call my office right now, 847-235-6131, talk to my team, or you go to the website, becomeabettertrader.com/champ, that the bet that I'm making, the trade that I'm making is, since you're getting this for virtually free, you're going to see the value and you'll be like, wow, I want to learn more from that guy. No wonder MetaStock does so many things well. No wonder the exchanges do so many things. No wonder he's written up in so many articles around the world. And so that's the trade that I'm making, basically giving you an ethical bribe, giving you something for virtually nothing, so that you can go out and see that I have what's different. No wonder I'm winning these competitions all over the world. Okay. Now, with that being said, I'm going to go ahead. Luis, can I type the link, please? Yeah, I can type the link. I'm going to start answering questions for you guys while we still have some time. I tried to get that out as fast as I possibly could, given the fact that we got a little short on time. But the good news is, with the technical glitch and whatnot, here's the good news, that it said you guys will be able to come to a live trading event if you signed up at the front page of the website there. You'll also be able to go ahead and, here, I'll type this into or call 847. So Luis, it's coming in a second, buddy. 6131, because my team is standing by there as well to take your call to help, because we got a lot of our foreign students here. Sometimes they like a little help. Okay, so let me answer all these questions. Okay. Yes, Michael, and Michael B, and Luis, I typed the link in. Let's see. Will you have a 5-day workshop in 2017, since in 2016 you did not have? The last time you did in May of 2015. Bobby, which country are you referring to? Sorry, I don't know which country. I mean, I travel all over the world. I travel with brokers, institutions. They invite me to speak all over the world. Which country are you referring to? Singapore? Oh, yeah, okay. So yeah, Singapore, Malaysia, Thailand, Hong Kong. I certainly do a lot of things over in that region. But yes, I suspect I will in 2017. 2016 here is going to be a little crazy. Our baby boy is going to be born here in about 2.5, 3 weeks, so pretty great. David, well, let's see. I've won about 20 out of 23 or so of those trading competitions. So, that doesn't count the second place that I took, like in the international forex trading competition. So I don't count second place. There's second place, no prize for second place from my perspective. So pretty darn awesome from my perspective. And let's see. You mentioned fitters and so I assume you mean futures and stocks. What about Forex? Denzel, let me be clear. In fact, I actually showed you an example with the trailing stop that was done on the Japanese yen. So it doesn't matter. Japanese yen, again, currency, so it doesn't matter what you're talking about there. Okay. So let's see, what other questions do you guys have there? Yeah, you just call the office. You're welcome to talk to the team right now, 847-235-6131, or go to the website there. Yep, they'll take good care of it. So yeah, I'm pretty excited about it. It's a great way to take care of you guys and give you something for virtually free that you can go ahead and then we'll hopefully set you off to a long-term relationship with me once you realize, okay, no wonder he's winning all his competitions. We'll work in the Indian market. Yeah, as long as you have liquidity, and any market that has liquidity, you can go ahead and use it from. So if you have a lot of gapping in your trading, so in other words, if your market like opens and closes here, the next time it opens and closes here, then it opens and closes here, then it opens and closes here. That's not the kind of thing that I want to use. So like a lot of really thin things that are traded in the overnight European session, for instance, where you see that really gappy type trading, that's not the time you want to use it. You want to use it so usually during the actual markets, like the European session. Works great. I mean, I've won trading competitions, right? You guys saw it. I showed you the actual trades I took during the European session. So as long as you have some sort of liquidity, it should work for your market. Let's see. Is the video a hard copy or online? It's online, so you can access it right away. Yep. Let's see. Can MetaTrader link to Shere Khan Indian trading platform? I don't know. This is MetaStock, not MetaTrader here. Jeff could probably answer that. And let's see. Jamie says the $97 offer you provide. Do you need to have the MetaStock software? No, you do not. You need to have something that can put some very basic indicators on, like stochastics and 20-period moving averages and stuff like that. But I do a section in there. One of the parts, I filmed this over the course of a year. It's a 3.5-hour segment, or 3.5-hour course. And one part that I put in there was showing how to use it with like the Pro Pack of indicators. So if you have the MetaStock Pro Pack of indicators, you can get more value out of it. Okay. Well, not very often from my perspective, Pete. Sadir says, let's see, not able to see charts, only become a better trader. Well, at this point, yeah, you're probably not seeing charts now. I left this up so that people can get themselves situated with this great offer that I made. But now I'm just taking questions. Okay. How about monthly subscription alerts? No, this doesn't include that. This is something different. This is teaching you to fish. This isn't me trying to make you codependent on me. This is me giving you value. Hopefully you'll take it away. Hopefully you'll be profitable, and then you'll say, "Wow, I want to learn more from this guy. He's winning all these competitions around the world, I see the value in being with this guy." So that's what we're trying to do here: is teach you something you could take away and not be dependent on. Okay. Let's see. Larry. Hey, Larry. Rob, I am retiring from the sheriff's office in the next few months and will be joining the room. I'm looking forward to it. Right now, I'm sitting at home due to an injury while stopping an escape attempt. Well, Larry, recover well, recover fast, get out of the sheriff's department. God knows I did 20 years ago. Law enforcement's not what it was. It's just not appreciated anymore. So get out, and I'll look forward to working with you. Yes, I have the MetaStock software. What do you provide for MetaStock with the offer? So with MetaStock, you're going to get not only the original training courses, the first part and the last part, but the midsection you'll be able to take advantage of then as well, because you'll have the Pro Pack. If you have the Pro Pack of indicators, if you don't have the Pro Pack, then you're just really going to be focusing on the first and the last sessions, because basically I taught all the training there without requiring any sort of proprietary indicators. Okay. All right, and so let's see here. Screen's kind of flying by. I'm trying there, but let's see. All right, so you know what? I guess we have less than a minute. So what I'm going to do is part of the way you avoid whipsaws is you focus on the quality of trend there, Sudhir. So try to get that 20-period exponential moving average over the last 20 bars of data. That's going to go ahead and be really helpful. Okay, and so. Jeff, I know there's a lot of questions, but obviously we had to kind of condense the entire thing. But look, that's why we did two things for you, gang, in closing. We went ahead and made it so you can join me. Go to my website, go to the front page. There you can go ahead and see, you'll be invited to a live trading day. Also be invited to an update class to this as well. And also, you'll get the great recording to play over and over. And you're given this basically virtually free offer to learn some more setups of mine over 3.5 hours, so a far more comprehensive course. What we try to jam into 30 minutes here on another strategy. So with that being said, well, Jeff, over to you, my friend, to take it on. I know we've got great friends of mine like Hubert speaking at 1 o'clock Eastern today, and so you got a big lineup of speakers, and so I want to get it right back over to you. Thanks, gang, for being awesome. And yes, Candace, that's very nice. You wishing me health for my child, my unborn little baby boy. We haven't come up with a name for yet, so thank you. That's very nice. Thank you so much for all those nice comments, gang. That's very nice of you. Thank you. Appreciate that. Jeff, over to you.
Thanks, Rob. I know one thing that stresses me out more than anything is when we have technical glitches. And so hopefully we got that out of the way for today. Rob, you did a great job. You're a true professional. You probably did better than I would have, given the compression and the time zone and all that kind of stuff. But I want to kind of move real quick so that we kind of don't run behind all day. Rob and I did sit down. We worked on a ProTrader Pack Elite. It's all of his indicators. It's also all of his alerts. It's very unique in terms of the way that it's structured into MetaStock, and it does in the fact that it does offer, scanning. Here's just a real quick screenshot of the Dow yesterday, and you notice all day it was very, very bearish. We have a little bit of a dashboard view here that kind of gives you an idea of what all of his indicators are doing, gives you some key points about what everything that's going on in his indicators are telling you what to do. It's a very, very good add-on. I wish I had a few minutes just to talk about it, but we're going to kind of keep things on schedule. The big thing people really like about it, including Rob, is the alerts. If you're watching something and one of these signals happens in real time, it'll alert you, and you can send that alert to your email.
Hey, Jeff, can you see how many IRBs are on there?
I know, it was great. I love
look how many IRBs are on there. Yeah.
For me, like yesterday's a great example because I wasn't in short at the beginning of the day. Notice that the market's kind of tanking all day long, and how do you kind of take advantage of that? Is it still a good opportunity to buy? And if you just look at the activity today, if you just look at the last bar, right now it's bearish increasing, it's bearish increasing. There's still opportunities for you to take short according to kind of what the indicators are telling you. So it's a great add-on. We'll probably take some time during Q&A at the end of the day to actually kind of go through it a little bit more. But one of the things I love about my job is working with top market timers and kind of automating their trading strategies and getting them running in MetaStock. And very proud of this product. We worked really, really hard on it with Rob, and Rob has probably spent, 40, 50 hours with my programmer just making sure everything was perfect. He's, like I said, a true professional. It's not often you get to work with somebody that's won 20 competitions with real money. That are live. So his indicators are available for MetaStock. If you're already a MetaStock owner, there's two options for you. You can buy them at $9.95, which is a discount of 50% off. If you're not a member of MetaStock, they include a subscription trial. It's going to include a lot of training to help you get started with it. It's going to include his ProTrader Pack Elite, and will of course give you access to the platform. So if you have questions, give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. Rob, thanks for doing such a great job in spite of the fact that we did have 15 minutes worth of technical issues. I really appreciate our professional relationship. I also appreciate your friendship. Want to throw out...
The great group was great, so thanks so much, Kang. Bye-bye.
Going back to our sponsor, Stocks and Commodities, great magazine. Really appreciate their support. It's always important. I think the thing I like most about this event is being able to get some education about market, and it's really great to be able to have that delivered to you every day, or I'm sorry, every month.